All right. Ready to deep dive with us today?
That's good.
We're going to take a look at some commercial real estate opportunities.
In Texas.
Yeah, in Texas.
All right.
But we're just looking at like broad market trends.
Okay.
We're going very granular.
Sounds good.
We're going to be looking at a recent email newsletter from Eureka Business Group.
Eureka Business Group. Okay.
Yeah, they're a brokerage firm down in Texas.
Okay.
And they handpick some properties that they're really excited about.
Oh, cool.
Yeah, and so we're going to break down like what makes these listings so attractive, to these seasoned CRE pros.
Yeah, I like that approach, sort of a behind-the-scenes look at how experts evaluate potential deals.
Yeah, exactly. So this newsletter is dated February 1st, 2025,
Okay.
and it features a range of listings from like smaller properties all the way up to, multi-million-dollar range.
Wow.
And for each one, they give us these why we like it bullet points, which is where I thought we would start.
Oh, that's a great place to start. Let's jump in.
Right. So one that caught my eye is a 10,500 square foot single tenant net lease property.
Okay.
They call out a corporate guarantee, a high traffic volume, like 49,000 vehicles per day.
Wow.
And the fact that it's new construction.
That's interesting, in the current economic climate, that emphasis on the corporate guarantee, it's really telling.
Yeah. What do you think it signals?
Well, with all the uncertainty that we've seen, lately,
Yeah.
investors are naturally looking for safer bets.
Right.
A corporate guarantee really reduces the risk for the landlord,
For sure.
if that individual tenant goes belly up.
Mm-hmm.
So it's all about mitigating risk.
Yeah, that makes sense.
Yeah.
And it seems like that risk aversion also might explain why they're highlighting properties with high traffic counts.
It's certainly a factor, especially for retail spaces.
Yeah.
But remember, traffic volume doesn't tell the whole story.
Right.
Think of it like this. You could have a property on a busy street,
Okay.
but if it's surrounded by vacant storefronts, or if it's in an area with a low average income,
Yeah.
it's not going to be a slam dunk.
You're right. You're right. Context is everything.
Exactly.
Speaking of context, let's look at another listing.
Okay.
It's a 4,800 square foot retail center.
Okay.
Eureka Business Group loves that it has great visibility, 30,000 vehicles passing by each day,
Nice.
minimal landlord responsibilities,
Uh-huh.
and, this is key, national brand tenants.
National brands, it's almost like they're the gold standard in commercial real estate these days.
I know. Why do you think that is?
Well, they bring stability.
Okay.
National brands usually have solid financials and proven track records.
Right.
That translates into lower risk for investors.
Especially in uncertain times, yeah.
Yeah, exactly. They're less likely to default on their leases.
Right.
And they often sign longer-term contracts.
Which is great.
Yeah, provides a steady, predictable income stream.
So it's all about minimizing those headaches for landlords and investors.
Yes, absolutely. Predictability and stability are highly sought after right now.
Okay, so we're seeing a clear trend here.
Mm-hmm.
Investors want less risk. They want more certainty.
Okay.
But Eureka Business Group also mentions a few value-add opportunities
Okay.
in their newsletter.
Interesting.
For example, there's a 55,522 square foot flex business park
Mm-hmm.
and a 35,597 square foot retail center.
Okay.
That's only 76% occupied.
Oh, wow.
Both are described as having value-add potential.
Interesting.
That seems a bit counterintuitive, right?
Yeah.
If investors are so risk-averse, why would they go for properties that need work?
That's where it gets interesting. Value-add properties often appeal to a different type of investor.
Okay.
Someone who's comfortable with a little more risk
Okay.
in exchange for potentially higher returns.
Got it.
Yeah.
So these are investors who are actively looking to improve a property,
Exactly.
not just sit back and collect rent.
Think of it like flipping a house,
Okay.
but on a larger scale.
Yeah.
These investors might renovate outdated spaces,
Uh-huh.
attract new tenants at higher rents,
Okay.
or even reposition the entire property
Wow.
to appeal to a different market segment.
That's interesting.
It's all about unlocking hidden potential.
So we've got these two seemingly opposite approaches here.
Yeah.
Risk-averse investors seeking stability,
Right.
and then value-add investors who are embracing a certain level of risk.
That's a great observation, and it speaks to their understanding of the diverse needs and
Yeah.
appetites within the CRE investor landscape.
And it highlights that there isn't just one right way to approach commercial real estate investing.
Absolutely not.
It all depends on your individual goals, your risk tolerance,
Yep.
your market outlook.
It does,
Yeah, really interesting.
for sure.
So,
You ready to unpack another intriguing aspect of Eureka Business Group's picks?
you bet. Bring it on.
All right. Let's talk location.
Okay.
Eureka Business Group clearly understands that location can make or break an investment. And they're highlighting properties in some very strategic spots.
Yeah, I noticed that too.
Like, for example,
Mm-hmm.
there's a 34,600 square foot retail center
Okay.
that caught my eye.
Mm-hmm.
It's what they call shadow anchored
Okay.
by an EBG grocery store.
I have to admit, I'm not entirely familiar with that term.
Oh, yeah, that's a great one to unpack.
Yeah.
So essentially, it means the retail center benefits from being located near a major anchor store.
Okay.
In this case, an HEB,
Yeah.
which is a popular grocery chain down in Texas.
Okay.
Think of it like this. The anchor store acts as a magnet,
Okay.
drawing in a consistent flow of shoppers.
Yeah.
Those shoppers then become potential customers
Right.
for the smaller businesses located in the shadow-anchored center.
It's a built-in customer base.
Exactly, a built-in customer
That
base.
makes perfect sense.
Yeah.
Like getting a free boost from the big guy next door.
Right, exactly.
And this particular property is also described as being in an affluent area with a high concentration of retail businesses.
And those are two more factors
Yeah.
that make this location extremely desirable for investors.
Okay.
Affluent demographics mean higher spending power,
Right.
and a dense retail environment usually indicates a strong and competitive market.
Yeah.
Investors love to see that kind of vibrancy.
It all paints a picture of a well-thought-out strategy.
Yeah.
They're not just picking properties at random.
Right.
They're laser-focused on locations
Yes.
that have a high probability of success.
Exactly.
Yeah.
Now remember that single-tenant net lease property we talked about earlier?
Yeah.
The one with the corporate guarantee?
Yeah.
Eureka Business Group also highlights its location in a retail-dense area
Okay.
with a high traffic count of 39,000 vehicles per day.
Yeah, and they mentioned a 7% cap rate, which I found interesting.
That's a key detail.
Yeah.
The cap rate, or capitalization rate,
Right.
is essentially a measure of the potential rate of return on an investment property.
So a 7% cap rate is pretty attractive.
It can be,
Okay.
depending on the market and the specific property.
Yeah.
It's a quick way for investors to assess the potential yield
Mm-hmm.
of an investment.
Okay.
And it's smart of Eureka Business Group to highlight this metric
Yeah.
alongside those other location-based factors.
Yeah, it reinforces that they're not just chasing high traffic numbers.
Right.
They're looking for locations
Exactly.
that have the potential to generate solid returns.
They're taking a holistic view,
Yeah.
considering both the quantitative and qualitative aspects
Right.
of each property.
Okay.
So let's shift gears a bit
Okay.
and move up the price ladder.
Okay.
Have you spotted anything intriguing in the $2 to $5 million range?
There's a 29,785 square foot retail center
Okay.
that kind of stands out.
Right.
Eureka Business Group mentions its redevelopment in 2023.
Mm.
Strong tenants.
Uh-huh.
And this is a term I'd like to understand better.
Okay.
A hard signalized corner location.
Great question.
What does that mean?
A hard signalized corner essentially means the property is situated at an intersection with traffic lights.
Okay.
This is highly desirable for retail spaces.
Right.
Because it provides excellent visibility and accessibility
Yeah.
for both vehicles and pedestrians.
So it's prime real estate in terms of attracting customers.
Absolutely. That signalized corner is a huge advantage.
Yeah.
Especially when you combine it with the fact that the property was recently redeveloped.
Right.
This suggests it's been modernized.
Yeah.
And likely appeals to today's tenants and shoppers who have high expectations
For sure.
for aesthetics and functionality.
It seems like Eureka Business Group has a real knack for spotting those subtle
I do.
but significant details that can impact a property's success.
And speaking of success,
Yeah.
let's jump back to the $10 million plus category
Okay.
and revisit that retail center we discussed earlier.
Okay.
The one shadow anchored by the HEB. Remember, they emphasized its affluent demographics and retail dense location.
Those factors definitely caught my attention.
Well, think about it. Affluent demographics suggest a higher spending capacity among residents,
Right.
which is music to the ears of any retailer.
Yeah. Yeah.
And a retail-dense location means there's already a thriving retail ecosystem in place,
For sure.
creating a synergy that benefits everyone involved.
It's a recipe for success, especially when you add in that strong anchor tenant.
Right. It all points to a very deliberate investment philosophy.
Yeah.
Eureka Business Group isn't simply chasing trends.
Right.
They're strategically selecting properties
Yeah.
that align with their clients' long-term investment goals.
And as we've been discussing, their selections demonstrate a nuanced understanding of what makes a property attractive in today's market.
Absolutely.
Whether it's a smaller single-tenant property or a larger multi-tenant retail center.
Absolutely. They're considering everything from location and tenant mix to cap rates and redevelopment potential. It's a masterclass in CRE investing delivered through these carefully curated property listings.
It's been an incredibly insightful journey. And I think we've gleaned some valuable lessons from Eureka Business Group's approach.
But I'm curious, do you think their focus on specific types of properties reveals anything about their overall investment strategy?
That's a great question, and one we should definitely explore. What are your thoughts?
Well, it strikes me that, a large portion of Eureka Business Group's picks are retail properties. We've got single-tenant net lease properties,
Right.
larger retail centers, even that shadow-anchored center we discussed.
Right.
It makes me wonder, especially with the rise of e-commerce,
Yeah.
why are they so bullish on brick-and-mortar retail?
That's a great question.
Yeah.
You'd think with the growth of online shopping,
Right.
traditional retail might be less appealing.
Yeah.
But I think Eureka Business Group is seeing the bigger picture here.
Fair.
They're focusing on retail properties that are, well-positioned to thrive.
Even in a digital world.
So what makes these properties different?
Well, for one thing,
Yeah.
many of their picks are located in areas with strong demographics.
Okay.
Affluent populations with disposable income.
Yeah.
These are the types of shoppers who are more likely to value the in-person shopping experience.
Makes sense.
And remember, many of the properties we've discussed
Yeah.
benefit from high traffic counts and excellent visibility factors that are still crucial for attracting customers.
Location, 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 as they say.
Exactly.
Yeah, right.
And notice how several of the listings highlight recent renovations
Yeah.
or redevelopments.
Yeah.
This suggests that Eureka Business Group is prioritizing properties
Okay.
that are modern
Uh-huh.
and appealing to today's consumers
Yeah.
who have high expectations for aesthetics and amenities.
For sure.
They're not interested in, outdated strip malls.
Right.
They're looking for retail spaces that offer a more curated and engaging experience.
It's almost like they're anticipating the evolution of retail,
Mm-hmm.
recognizing that it's not just about selling products anymore.
Right.
It's about creating a destination,
Yeah.
a place where people want to spend time and connect with others.
Precisely. And if you think about it,
Yeah.
that sense of community and connection is something that online shopping just can't replicate.
So Eureka Business Group is betting on the idea that brick-and-mortar retail isn't dead, it's just transforming.
Exactly. And they're strategically choosing properties that are poised to capitalize on this transformation.
That's a really interesting takeaway.
Yeah.
As we've been deep diving into these listings,
Mm-hmm.
it's become clear that Eureka Business Group isn't just selling properties, they're selling expertise.
I agree.
They have a deep understanding of the Texas market and a vision for the future of retail that's really insightful.
I completely agree.
Their newsletter's more than just a list of properties.
Yeah.
It's a window into the minds of seasoned CRE professionals
Right.
who are making calculated decisions based on data
Yes.
experience.
And a nuanced understanding of market trends.
It's been a really insightful journey.
It has.
And I think we've gleaned some valuable lessons
For sure.
from Eureka Business Group's approach.
Absolutely.
If you're considering venturing into the world of commercial real estate,
Mm-hmm.
particularly in the Texas market,
Yeah.
Eureka Business Group's insights provide a fantastic roadmap for success.
And remember, whether you're drawn to the stability of a single-tenant net lease property
Right.
with a corporate guarantee or the potential of a value-add opportunity,
Mm-hmm.
there's a strategy out there that aligns with your goals and risk tolerance.
It's been a fascinating deep dive, and I hope our listeners are walking away with a newfound appreciation
Yeah.
for the nuances of the commercial real estate market and a sense of excitement for the opportunities that lie ahead.
Until next time, keep exploring, keep learning, and happy investing.